understand the money, understand the manipulation of money, understand what the problems are with fiat currency and debasement of it, and then you'll understand why Bitcoin. So that's the first thing, and once people can understand that, it's a small bridge to understanding why Bitcoin, and most of them will make that. They'll understand once they understand what Bitcoin really is. They'll make that small walk across that bridge themselves. They'll be like, oh, no wonder. Okay, now it makes sense to me.
All right. So today we have James Lavish on the podcast. James, thanks so much for joining us on the show.
Yeah, Stefan, good to be here, and looking forward to this discussion. It sounds like it's going to be unique.
Awesome. Thanks. So I'd love to start the podcast talking a bit about your background, specifically, as it relates to your career in finance. I think people come to Bitcoin in a lot of different areas. Specifically, traditional financial people who have been in the, let's call it, traditional system are more reluctant to come into Bitcoin. So I'd love to hear a bit from your perspective. Well, first, maybe just a bit about your background, and then the beginning of your Bitcoin journey. Let's call it.
Yeah, so I'm from upstate New York, little town north of Albany, and so I played a lot of hockey growing up, and so some of the listeners may know that already. But I played hockey through high school and then into college. It actually helped me get into Yale, where I was playing at Yale, and so the journey really starts there. And I was a political science major. I thought that I was going to go into I thought I was going to go into politics. I thought I was going to be like a congressman or a senator or something like that. Good miss there. Yeah, I'm way too honest for that. But the reality is, while I was at school, you know, I was, I was playing hockey competitively. I played on the Yale team for 4 years, and right before going to Yale, I was drafted by the Boston Bruins. So in hockey, it's a little bit different than football and basketball. You go through the draft when you're 18 years old, and then the team that drafts you owns your rights for 4 years. And so I was drafted by Boston, not in a high round, in the ninth round. It wasn't a big deal. It was actually surprised to me I was even drafted, because I wasn't on any of the registries, any of the draft registries, and the scouting reports. Prior to that, you had to be in the top like 200 prospects. I wasn't in the top 200 in the nation until like literally just a few weeks before I kind of had this strong upswing from the high school All-American tournament and all that, whatever. But anyways, I get drafted, and so they own my rights, and I go to Yale. I'm playing at Yale. Everything's going great. And some of your audience may have heard this before, but I'm playing on a line with then the all-time leading scorer in Yale history. His name is Mark Kaufman. This guy, Martin Leroux, a French Canadian hockey player who is just a fantastic goal scorer. And we're doing great. I mean, our line is hitting on all cylinders. We're crushing it. The scouts are, and the GMs and assistant GMs from the teams were watching us closely, because there were a number of players on that Yale team who were owned by or their rights were owned by the different teams. So the NHL team. So anyway, it comes to be right at the end of the first term. It's Christmas time, and we're playing just a regular home game against St. Lawrence, who wasn't at the time a great team. They had their ups and downs, just like we did. And I'm just getting and again, like our line was just killing it, and I'm flying high. I'm feeling like everything's great. I'm on the U.S. kind of like that larger U.S. national team that they have, which is like almost two full rosters of a hockey team. I'm playing. I'm on that, and I'm super excited. I'm just confident, like everything's going right. And then as it happens, I'm coming out of my defensive zone, and I don't know how much you know about hockey, but
Mm.
it's typical just to kind of post up on your wing coming out of your zone. Your defenseman gives you a pass, and you go to break out. And I get the pass, and I look up to go to break out, and I get hit by their left wing, and he hits me just in a funny way where my skate. It wasn't a dirty hit; it was a hard hit. It wasn't a dirty hit, but my skate caught in a groove in the ice. And one of the bad things about Yale is we had this beautiful architecture of it's called the Ingalls Rink, and it looks like the inside of a whale. It's called the Yale Whale. If you ever
Okay.
get a chance to be in New Haven, you should take a tour of the facility. But the wood and everything is like it's gorgeous architecture, but there's no insulation up there. It looks like ribs of a whale, but there's no insulation, and so for whatever reason, it just gets really hot in there. So the ice is pretty soft. Anyways, there was a groove in the ice. My skate went into it. I took the hit. I heard a big pop, just like and then it hurt, like, but I wasn't sure what happened. I go back to the bench, and and lo and behold, I jump out for the next shift, and I just collapse. There's I have nothing in my knee. And so that was it. In an instant, just like that, my entire world changed, and my identity changed, everything. I just wasn't sure what was going to happen. I tried to keep going. I ended up getting effectively traded from Boston to New York, the New York Rangers. I went to New York, went to the camp, played in the camp. It was a small camp. They knew they were a powerhouse team. They had just gotten this guy Mark Messier to come and play for them, and they, long story short, they go on to win the Stanley Cup without me. And the U.S. national team goes over to Lillehammer, Sweden, to go play in the '94 Olympics without me. So it was pretty rough. But I find myself in New York City because I had just been playing with the Rangers. And so I'm in New York, and I'm kind of sleeping on friends' sofas, and I don't know this is a long story, by the way.
No,
I
but
don't
it's a
know.
good story. It's a good story. Yeah.
So I
Yeah.
don't know what I'm going to do. And so I'm literally, all I can think of is, well, I've got a political science degree. Maybe I can just go be an attorney or something. And I bump around, and I get some interviews, and I get offers from a few law firms in New York City. I mean, there were not a lot of jobs at this time. It was 1994. It was just, the economy was not doing great. And so, and I get some job offers, but they're all from companies that are defending big tobacco in that huge tobacco case where they had the whistleblowers and all that. And there's a movie about it with Russell Crowe. It was actually a great movie. But anyway, I decided, I'm not sure this is the right path for me. I'm getting these offers, and they're not great offers. It's in New York City, and I'm probably undercutting myself here, underestimating what I can do. So I start talking to some friends. Again, I'm sleeping on sofas. They're like, "You got to find a job, dude." And so, because I don't have any money,
Yeah.
like I didn't, like my parents didn't have a ton of money.
Did the
So
Rangers pay you anything for, like, how did it work
no,
there?
you got to.
Do they?
I mean, they take care of everything. You just show up, and they take care of everything
Yeah.
for the month that you're there. But no, you're not getting paid anything until you actually sign a contract. And I went unsigned because basically the Bruins let me go to them because I had hurt my knee. The hard part is I had a contract on the table, but with Boston, but I didn't take it because I knew the way that it was structured, it just wasn't structured in my favor to stay in either AHL or the NHL, like the top two
Yeah.
tiers. Like they clearly wanted to see if if I was going to be able to rehabilitate properly, which it turns out I knew I was not. It was going to be tough.
Was it something
Anyway,
that when the injury happened, it was like immediate? You knew it was kind of not going
well,
back to the same form, or
this is a long time ago, so it wasn't like and any the NCAA hockey, it wasn't big time. I mean, still
yeah,
not big. That's not like basketball or football, but they didn't do MRIs on everybody. Like the school wasn't just going to pay for an MRI for me, and I didn't have the money. My parents didn't have coverage that would pay for it, so so I didn't get one. But I knew that it was a problem, And what it turns out to be, Stefan, is I had torn my medial collateral completely. And so that
Okay.
was gone. And so when you pulled my knee, it just went all the way out to the side. There was like nothing in
Phew.
there. It was awful. But
Yeah.
I did have a stop point for my ACL. The question was, well, how strong was it? And it turns out that it ends up later. I'm just jogging one day and it just snaps through completely. So there was going to be a really long rehabilitation for me, and I knew it. So anyway, so I'm back in. I'm sitting in New York. I'm trying to figure out what I'm going to do in New York, and I wasn't sure. And I get a few of my friends who had also been hockey players or athletes at Yale or the various schools. I mean, we kind of knew each other through playing hockey with each other in the summers and everything, because it's kind of a small community. And so they're like, hey, you got to come see what we do. I'm like, I can't, I don't have a strong enough finance background. I didn't study finance in college or an undergrad to go into investment banking. They're like, no, 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 no. We're in the sales and trading side. You got to come see what we're doing over here. Okay. So I bump around, get some interviews, and it turns out I'm actually pretty good in math. And so it turns out that there was a position that was that they kind of created for a few of us at SG Warburg. This is an old British investment bank. You may have heard of it, being
Hmm.
from Europe, but um, and they're British investment bank, but they're operating in New York. And so what they needed was they needed help on the floor of the New York Stock Exchange to trade what's called ADRs. And those are American Depository Receipts. It's basically a way for foreign securities to trade on the New York Stock Exchange. So what you have to do though is you buy and sell them in Europe, and then you have to translate that over to the New York Stock Exchange. It's so their American Depository Receipt basically it means that you create a basket of them in order to change to trade on the floor. Why do you do that? Well, if you've ever noticed the shares in British stocks back then, at least, and somewhat now, they trade at very low dollar amounts. So you have to kind of bundle them up, make a larger basket of them, and then you have to convert it to U.S. dollars, and you have to add a stamp tax to it and all that. So it's just a mathematical calculation. And back then, everybody just had a calculator. We didn't have these big spreadsheets. Like Excel wasn't widely used in sales and trading and for hedge funds at the time.
Yeah.
And so whoever was fastest with the calculator and calculating out what the difference was in the change of in the prices in Europe versus the prices here in New York, you were going to make an arbitrage. They're effectively the same exact shares. It's just the difference is the currency and the stamp tax. So if you could calculate it out quicker than the guy next to you, then you were going to get the trade and you were going to make the profit. So that's basically the first thing that was my first job, was on the floor of the New York Stock Exchange doing that for the traders. Yeah.
Is it? I think when people think of, like, the New York Stock Exchange, and especially being on the trading floor, you get the images of the Wolf of Wall Street, or other ways that it's been depicted in Hollywood. How was that experience like? Was it similar to that, or?
Absolute chaos. Absolute chaos. It was jam packed, shoulder to shoulder. Like I had this little trading booth and we were all packed in. The brokers were running around like mad. You had a wall of buttons that you could page them, because nobody had cell phones. You had little pagers that were pagers just for the stock exchange. And so they only worked in the stock exchange, where you hit it and it would page them from across the floor. They'd come over to you. Yeah, what do you need? Or they'd call you from a phone out in the trading pits, by where the specialists are. And so they would call you, say, what's up? You tell them what you needed, and they come. And it was a totally different language for me. I didn't know, and they speak so fast that, you have to pick it up really quickly. You have to learn the language really quickly. And then you have to understand the math really quickly, and you put it all together. And if you're good at that, then you can be, a good trader. So, but yes, it was absolute chaos. If you ever see the movie Wall Street, the original one with Michael Douglas, just like that on the floor. I mean, it was exactly like that. Was 1987. So this is just a few years later. I mean, we're talking about 1994. It was no different. So there were no computers. We had a little screen that you could see some stuff on it, but not much. And really, in my booth, because we were a British investment bank, we didn't even have a screen. All we had is our
Yeah.
our bank of phones, and they had like these. It just had all the buttons for the traders that were upstairs, either in New York or else or in Chicago or whatever, and they were all right there. And so you'd see it flashing, you'd hit it, and you'd have to listen to it, write it down on a ticket. So yeah, it was chaos. And there was one time where there was a the when the event, as I recall, it was Mexico had unpegged their currency, devalued the currency, and I was the only one in the booth. And so I may be 6 months into my career, and I'm the only one in the booth, and the lights are all flashing, and I'm trying to take notes. I'm listening. Yeah, everybody. And so before the market opens, you get people upstairs asking for a look. So it's not like now you just pull up your computer, you could see everything it's on. Like you could see everything. You could see the order book depth, everything. But in here, you had to actually physically tell them what it was. You have to tell them, okay, and you'd have to get their call. Okay, you want a look in Hanson or British Telecom, and then you'd hit the button. You'd get a broker to come in, and they would tell you, they would say, "Well, what do you need? I need to look in British Telecom. I need to look in Mex, whatever, Telmex, whatever." And then they would go out. They'd go get the looks, and they'd come back and hand you a piece of paper with the market on it. And so you can imagine that by the time that they went out there, by the time they got the piece of paper, the time they came back, well, it's probably changed already. So that's all happening. I'm getting orders, and it was just chaos. And so my book, my there was a little desk about this, maybe 18 inches deep, underneath the phone bank, and I'm writing these tickets that are both orders and looks, and they're piling up, and there's so much chaos. And here's the best part: SG Warburg had fired all of our floor brokers. So I had no brokers that worked for me. The only brokers I had, okay, so I'm 6 months into my career. I have no brokers who are working for me, and I'm alone in a booth trying to get orders placed and looks for people upstairs so they can make an intelligent order. And all I have access to is what are called $2 brokers at the time, who are independent brokers that will just pick up excess order flow from anywhere. And none of them are coming in. Just none of them are coming in. And like I'm hitting them, hitting them, hitting them, and nobody's answering because they all have more important stuff. I'm just like this, rookie out in the blue room. They don't even, like, sorry. And so I finally get this guy. His name is Jimmy Rutledge. I finally, he finally calls me. He's like, you've buzzed me like 9 times. What is going on? I said, Jimmy, I need your help. He goes, oh shit. So he comes running into the booth, and I look at him, and the paper has been piling up and it's falling down. And you can imagine, like, there's paper everywhere. And I'm starting to get that, like, my heart is palpitating and I can't breathe. And I feel like the waves are coming over me. Like, oh my God, I'm literally going to have a heart attack here. And then Jimmy finally calls. He's like, what's up, kid? I'm like, I need you. He's like, oh shit. So he comes running in. He's like, what is going on? I'm like, this, and I hand them these tickets. He's like, holy shit. He takes them all, puts them in a pile, and runs out and literally saves my ass and the day. And so yeah, baptism by fire. Welcome to Wall Street, kid.
Yeah, what a different time also from what it's like today. I mean, I haven't have experience now on Wall Street, but I can imagine it's a totally different world. But so of course that was 94. That's 30 years ago. Now you've had a wealth of experience, let's say, in yeah, both institutional investing and risk management. And I think what's unique also is you've been able to experience different bursts and bubbles. The .com era, the 2008 financial crisis. So when you started your career on Wall Street, like you said, you weren't particularly, you didn't study finance, you're not coming from a huge finance background or anything, but as the years go on, as you get more experienced in finance, were there points in time where the more you learned about the system, the more you started to also question it and doubt its legitimacy, let's say, or just in general, like as you got more experience, how did you start to form different opinions?
Yeah, that's a great question, and the answer is I was too stupid when I was younger to notice how corrupt the system was. Truly, I just didn't understand. I go from that position. I end up getting hired by a hedge fund, and it's in New York, and I start trading something called merger arbitrage. So I'm the same thing, two-sided trade arbitrage, same kind of thing, except now you have to handicap the likelihood of mergers, or you're trading around convertibles and convertible bonds and the arbitrage around convertible bonds. I won't bore your listeners with that, but the point is that we were just trying to pick off inefficiencies in the market. And so my whole lens was I don't really care what the market does. Market go up, market go down, doesn't matter to me. As long as I am picking off inefficiencies, I don't care. If the market crashes, it doesn't matter. It may provide opportunity for me because if the merger closes, it's fine. If this convert is still, is still viable, it's fine. I don't, it doesn't matter to me. So that's one thing. And I did that for many years. I actually did that. I ended up leaving New York, going to Texas, and I'm working for now a hedge fund that grows from $500 million under management when I joined to multiple billions of dollars, to almost $3 billion by the time I left. And so I saw how powerful some funds and fund managers could be with that kind of money. And it's, those hedge funds were effectively moving markets, and so the first time, honestly, Stefan, that I noticed there was something wrong in the system, I really took note of it, was in 1998. I'm sitting on the desk, and we have a huge portfolio of arbitrage trades and hundreds of millions of dollars, and we're watching the markets kind of melt down around us, like the credit markets, the merger markets, the arbitrage markets, like everything was just melting down, and in everything that we were doing, and we knew that somebody big was blowing up. And so, but it had happened right after when again Russia devalues the ruble, and credit spreads blew out in Europe, and so I'm watching this, and we're not really sure what's going on, but we know somebody big is unwinding almost every single trade that we have, both on the merger arbitrage side and on the credit side and the convert side. Like everything was just blowing up around us, and I'm sitting there, and it's nighttime now. It's maybe 8 o'clock at night. I'm still in the office with everybody. We're just like literally hunkered down trying to figure out what's going on. And we get a phone call from somebody who I will not name, but was another big hedge fund manager. And so, at the time, he was not the manager yet. He was actually he was just managing one of their large books. But we get a call. I didn't get the call. Somebody next to me got the call, and he said, "Hey, you guys have any exposure to Goldman?" We're like, "No, what's going on?" So what does that mean? Any exposure to Goldman? Well, as a hedge fund, you use what's called a prime broker. So it's basically your main broker, and they custody your assets. They give you leverage. They buy and sell everything. Like they basically DTC everything. They settle everything. And they're your main broker, where your cash is, your stocks are, your bonds are. And you can have multiple, and hedge funds our size did have multiple. At the time, we were adding more, but we hadn't taken on more. We had Merrill Lynch, that was it. And so, no, we don't have any exposure to Goldman. Why? What's up? Well, what about counterparty exposure? Well, not sure, because we had a bunch of swaps and derivatives on in our books, whether they were swaps for currency swaps and currency forwards for arbitrage trades we had, or they were swaps or derivatives in the convert book. It was unclear who the counterparties were. So we didn't know, but there he was like, well, if you have any exposure, if you can figure out, get out of it now, because Goldman's going under tonight. And we're like, whoa, okay, so what is going on? So here's where I wake up. We go get to the office the next day, and it comes out that Goldman had had an emergency meeting with the New York Fed, and they had asked them. They said, look, we have massive exposure to this hedge fund called Long Term Capital Management, and they're blowing up. And if they go under, we go under. If we go under, we're taken down the street with us, and here's why. And they showed their derivative exposure, and so the New York Fed was like, "Oh my God, we can't let this happen." So they engineer a bailout from other banks who help, basically help bail them out. And so the Fed didn't come in and buy paper. The Fed didn't come in and stop, put in a backstop, but they came in and engineered one basically. I was like, wow, that's pretty wild that just happened. That was 1998. Now you flash forward to 2000, 2001, and you've got you remember the tech. Well, you wouldn't remember, but the tech bubble blows up. And then you flash forward to 2008, and lo and behold, when we have the markets melting down, the credit markets melting down in particular because of the mortgage market, what happens? Well, the Fed and the Treasury get together and they print trillions of dollars and they start monetizing the debt in order to give the backstop. And this is where the Fed put really solidified. We knew it was out there. Back in 1987, Greenspan announced it back, when I was in high school. You had Black Monday, and he announced, "Hey, don't worry, we've got your back," and that's kind of shored up markets, even though they didn't have to do anything. Well, now you flash forward to 2008, they did a lot. Then you flash forward to 2020, and of course, even the multiples of that. But that was kind of my first, 1998, my first wake up call that this system's a little bit rigged, and you can take on risk, massive amounts of risk, where long-term capital management had $100 billion of positions on $1 billion of assets. They might have had more, but that's what the estimate is. So it wasn't a pure meritocracy. Let's put it that way.
Yeah. No, it's really fascinating to hear your background and how those events, especially going back to 98, kind of formed and helped to form your opinion. And I think, Bitcoin, of course, was created not until 2009. But what was your experience? So you're experiencing these events happen, and you're kind of waking up to the fact that, okay, this isn't how things should necessarily work. As you said, these large funds take on huge amounts of risks and then get bailed out if their trades or strategies don't play out as they expect. But what was your opinion at that time? Were you kind of almost settled to the fact that, okay, this is just the reality, I have to play this game? Or was there a part of you that was also looking or hoping for kind of an alternative system, if you will?
Yeah, no, it's a good question. The answer is no, I wasn't looking for an alternative system, because the reality was, Stefan, is as those trades were blowing out, remember, we're in arbitrage. Like I said before, we don't care what happens in the market. As long as these trades, as long as these mergers close, or the bonds that we're trading around are viable, as long as the market can rarely impact a bond, like a convertible bond, whether or not it's viable, unless there's an underlying issue with the company. So we were, at the time when this was happening, we were kind of just picking away at spots and just adding more and more and more and more and more exposure to all of these opportunities. Well, of course, when long-term capital management effectively gets bailed out, not, they didn't, but the Goldman did, and it saves the street from having to blow out everything because of this counterparty risk. Well, everything just goes right back up to where it was prior to long-term capital management implosion. And so we made a killing. We made an absolute killing that year. And so is it fair? Well, I mean, in the greater scheme, no. But for what we were doing, we did nothing illegal or unethical. It's just we saw an opportunity in the market, and we were just like, well, oh, they got, well, good thing that we were there buying all this stuff before Goldman got bailed out, because it snapped right back up to where it was supposed to be. Um, so, you know, and we had no idea that they were actually meeting with the Fed. We found out afterwards. It was like, oh my, like, wow. Well, the Fed kind of saved our ass, meaning short term, but not really. Like, it doesn't matter. They were going to close anyways. But the point of it is, we were able to make a lot of money off the opportunity. So the question is, did I realize that this was an insidious kind of system? No, I didn't. Flash forward, keep going, go to the 2008. Um, you know, uh, the crazy thing is, when these CDS spreads were these CDS trades were going on, Kyle Bass came and asked me and some other people if we wanted to be involved in this trade. And I was at a firm that, fundamentally just wasn't, they just thought, their attitude was, we can't make money off of other people's misfortune. Okay, that's honorable. Reality, it's not exactly what happened with Kyle. I respect Kyle very much. I'm friends with him. But once again, the Fed comes in and bails everybody out, which would not have helped him. He was obviously looking at the other side of that trade, and these things collapsing. But you know, that's when it really kind of that lens solidified for me, and how much the money, the market, the how much the money is manipulated. That's when it really came into clear view for me. Um, but I was working in a firm that wasn't really positioned to do anything about that. But we had a small hedge fund, and mostly private equity at this point. However, just keep stepping forward. Now it's 2013, 2014, 2015. Um, and my wife, 2015, 2016, somewhere in there, I think. It could have been as late as 2017, but it was early enough that Bitcoin was trading in the, at a very low value, in under 1,000, I think. And my wife said that she was listening to a podcast with Tim Ferriss. You know who this
Okay.
is?
Yeah. Yeah. Of course. Yeah.
And she said, "Hey, they're talking about this Bitcoin thing. I think you ought to check this out." And I mean, I'm not arrogant, but being the financial wizard of the family, I'm like, "Honey, I, don't worry, I'll take care of the investing." You know,
uh,
and I kind of brushed off. I laugh about it now, but I didn't really take it seriously. Not her, but I'm like, what? Who knows? Tim Ferriss, 4-hour work week. I mean, what are we
Magic
talking about?
internet money.
Yeah, it sounded like a get rich quick,
Yeah.
like a yeah, it sounded like a scam coin or whatever. I didn't know. So, but that stuck in my mind. So now flash forward to 2018, and Bitcoin had gone to 20,000, came all the way back down to like 3,500. And so, and I had this like an extra amount of money that I want to invest, and I had my regular funds. I have my investment fund. I've got money in the fund that I'm helping manage. I've got some private equity, but I wanted to go out in the risk curve a little bit. I wanted to do something different. I want to go and do something that's completely different, uncorrelated to everything else I was doing. And it was nagging in my mind, this thing, Bitcoin, because I keep seeing it come up.
Yeah.
Well, you pull up the crypto page on Bloomberg back then, and had a list of all these things, and Bitcoin, Bitcoin Cash, all this other stuff. And I was like, I don't even know what the difference is here. So I go and talk to some some of the experts because I'm in Wall Street. I'm an institutional investor. I have access to anybody on Wall Street, and I start calling around to the different technology analysts and portfolio managers, and because these guys they're the ones who understand this new technology. What is it? Is this something that is there anything here? Because I'm looking and I'm like, there's got to be something here. This hasn't gone away. And so, and every single one of them, Stefan, every single one, I mean, every single one of them said it's worthless. It's nothing but a Ponzi scheme. There's no underlying value. Don't put your money in it. It's a total scam. You'll lose all of it. Just move along. It's just basically it's a meme coin, basically. And so, you know, I like to say, thank you so much for warding me off of Bitcoin at $3,000. And so I ignored it. And to my own detriment, I listened to the so-called experts on the street who had no clue what they were talking about. Absolutely no idea. All they were doing is listening to each other in a little echo chamber saying it's worthless. Oh, it's worthless? Oh, okay. But CNN says that, CNBC says it's worthless. And so does, Bloomberg says it's worthless. Okay, so it's worthless. And so they're just climbing all over each other with misinformation, disinformation, not understanding it, no clue how it was decentralized, how it was actually, it was a protocol that was immutable. Like they had no clue how it all worked, how the mining worked, nothing. And so, unfortunately, everybody gets Bitcoin at the price they deserve, and I did not deserve it then because I didn't do the work properly. It's my own fault. I stayed in my echo chamber.
Well, I think it's difficult because I think especially when you have such a wealth of experience in the traditional system, I think it's you see it also with technology and just a lot of areas of life. If it's something a system then anything outside of that system seems foreign, seems not realistic, and that's why I think also still today Bitcoin, even though it's I think much more established now, especially with an ETF and things like that. You still see sometimes when I look at the traditional media outlets like a Squawk Box or those types of shows, you still see traditional pundits who just have no clue about Bitcoin talking about it as if they really know about it. And so that's why I think your background is really fascinating, because you do have this traditional finance background, but then you did make that realization at one point that okay, this is actually something valuable. So at what point how did that look like? At what point was it like, oh wait, no, maybe they are wrong, and maybe there is really something here?
Yeah. So now you flash forward to 2020. We go into lockdown, and I leave Dallas, and so. And as it happens, I leave Dallas because my youngest is going off to college. My oldest is already in college. I'm like, well, I'm not going to stay in Dallas locked up by myself. I'm going to go back out. I'm going to go out to Vegas where my wife is, outside of Vegas. But and so I pack up my truck, leave. I come here, and literally like a week after I come here, it's Texas. So they're like, okay, everybody come back to the office. I'm like, no, I'm not coming back to the office. So I worked out a way to extract myself from there, but I wasn't sure what I was going to do after I left that firm. And so, which was in Fort Worth. And so I was kind of searching around. I was talking to people. I was doing some things, and my son, who's at Cornell at the time. He's at the time he's a sophomore at Cornell, and he's surrounded by really really smart kids. And he said, "Hey, Dad, I know you're not sure what you want to do yet, but I got to tell you, this crypto thing seems real. I mean, it's cryptology. Like, you should like go check it out because I think there's something here for you. I think this is growing rapidly, and I think this is something you ought to check out." So okay. And so he said, here are the things you need to look at. And he told me he had bought Bitcoin and wrote it all the way up, sold it, bought ETH and Solana. Anyway, so I buy some ETH, I buy some Cardano, I buy some Bitcoin, and I start doing my work on it. And I start listening to people. I'm watching all your big hitters on YouTube, trying to figure it out, like what protocol really means. Bitcoin seemed boring. It was big. It was old. It already had its run to its new highs. What is out there that's really exciting and new? Technology, right? And so it took me, but um, one video from Michael Saylor to understand what Bitcoin was. It was a short video. I can't remember exactly who it was with, to be honest with you. He's done thousands of them, or hundreds of them. And so I start migrating towards Bitcoin, and I'm like, okay, this really is the one that makes sense. And so I take what I've invested in there into Bitcoin. I start doing research on Bitcoin. I'm listening to Bitcoin podcasts. I'm reading Bitcoin blog posts. I'm on Bitcoin Twitter. Don't know anybody. I have like maybe a couple hundred followers. And I'm just following a bunch of people, who I can, to start like reading about it. And something pops up. I'm following Pomp, and Pomp has this interview with Jeff Booth. Okay, so I'm sitting on the edge of on my bed. I've got the video playing, and I'm sitting on the edge of my bed. My wife's out making dinner or whatever, and she's like, and I'm the one who usually cooks, actually, so this is really unique. But she's like, hey, what are you doing? You want to come help? I was like, hold on a second. Actually, can you pause that? Come here and look at this. So I'm like 20, maybe 30 minutes into a 40-minute video. I'm like, you got to see this. And she's like, what? So I rewind it, and we watched the whole thing all the way through on the edge of the bed, just with my laptop. And at the end of it, everything kind of clicks into place for me. And she looks at me and she goes, oh my God, do we own enough? I was like, I'm so sorry that I ignored you so years ago. But anyway, so the point is, what clicked for me? What clicked for me, Stefan, is the idea that, okay, I get Bitcoin. Okay, I get why it's immutable, it's decentralized. Okay, store value. Okay, I get it. Digital gold. Okay, I get it. But what? Like what's the catalyst here? And so what really made, and I've told Jeff, I'm good friends with Jeff now, and which is really kind of neat now going forward because our community is so small. But and I've told him this, and what really clicked into place for me was this idea that we have, the natural progression of technological advance means that you've got technology that's doubling in efficiency every 4 years. Is that right? Moore's law.
Yeah,
And
something
so,
like that.
and I don't want to quote it wrong, but basically the massive advances in technology are happening, right? And as those advances in technology are occurring, you have increased productivity for less energy, basically. So we're creating more through technology with less input. We're getting more output. Yet at the same time, you've got this system that depends on inflation, which means you need to have like the productivity has to rise in order to tax whatever. But basically, things have to become more expensive. Okay, in order to manage the past debt, because you need more dollars to pay off debt that you've just amassed. So you've got this increasing pile of debt, and so you've got this force that's inflationary, which is the market manipulation. So now go back to my real life lessons in 1998, and then 2008, and then in 2020. Now you go back to the real life lessons of, oh my God, they're expanding the money supply so rapidly. So that's happening over here. While over here, you've got the advancement of technology that's creating deflationary forces. Like you're getting more for less. And they're colliding. And so what is the answer? The answer is Bitcoin, because it can't be manipulated, and it will allow for this, utopian future of us creating so much output for a lot less work. And so, but the money it's so corrupt, it's so manipulated that it doesn't allow for this to occur. but Bitcoin does. And so it's not just an investment, it's not just a store of value, it's actually the answer to that question of why are why are our lives not getting better even as technology advances so rapidly? How is that possible? Well, it's because of the manipulation. And this fixes it.
Very well said. I think, yeah, and Jeff's been a great resource for myself as well. I've had him on the show too, and his book, The Price of Tomorrow. I think for me, when I first read that, it was also kind of this like a bit of a eureka moment where you're like, because when you hear him explain it and when you read the book, and I told him this too, it sounds very simple in theory, but yet so few people understand it. When you take, technological advancement and that society is getting more productive, so those productivity gains should be flowing to the people and we should be working less, we should be, things should be cheaper around us, but you do have this inflationary system that's combating that. It really, I think I agree with you, it's a really good way to also understand Bitcoin and why it's important. um, and so for me, and I guess for a lot of Bitcoiners, it's sometimes frustrating when you are kind of when you do have that eureka moment, but there are still a lot of people who don't, fully understand it. And in your experience, how do you see that progressing? Do you see it's more of just, well, I guess people educating themselves? Do you think it'll be more out of necessity that people adopt Bitcoin, or how do you see that escalating over the next few years?
Yeah, it's kind of interesting. And what I'm watching here, at least, Stefan, is that Bitcoin catches on grassroots in areas that need it, areas of oppression, areas of high inflation, where people have to flee their countries when because of oppression, dictatorships, whatever, and they're trying to leave, but they have to leave everything behind. Where with Bitcoin, if you just have a phone and an internet connection, you can take your whatever investment or capital or cash you have, you can get it into Bitcoin. And then with just 12 or 24 words of unlocking a seed phrase, you can take that anywhere in the world. And you're not even taking it. It's accessible anywhere in the world. It's not even like you're porting it anywhere. It's in every, it's available as long as you have an internet connection. So that's one part where you've got people who are they're in extraordinary inflationary environments where their value of their base currency or local currency is devaluing so rapidly in places like you've seen it in Venezuela, and you've seen it in Lebanon and in Egypt, and like you see like these places where their currency just devalues so rapidly. But if they can put it in Bitcoin, it doesn't matter to them if Bitcoin is doing this, because it's doing this as it's appreciating, whereas their own currency is doing this as it's depreciating. And so what does it matter to them? They'd rather, if you're going to have volatility, you'd rather have volatility in a rising asset than a decreasing asset. So that's one part of it. The second part of it is we're here in the United States. We're U.S. centric. We use the U.S. dollar. The U.S. dollar is it's the global reserve currency. Everybody uses dollars. You can take your dollars and go anywhere in the world and they'd be happy to take them. Everybody wants dollars. And even in those nations that I'm talking about, they want dollars, but they don't have access to them. They have easier access to Bitcoin in lots of places. So that's the crazy thing. Here, it's more like, well, we have dollars. We're the global reserve currency. What we don't need to have, like, who cares? Yeah, inflation's 9%. Who cares? It's coming back down. Now it's 3%. Not really, but you know what I'm saying. So here, the issue is you've got mainstream media that ignores it, that will misinterpret it, will misreport on it, and by and large, people here in the United States have, a lot of them just don't think for themselves anymore. Unfortunately, we're seeing it. I mean, we've got a presidential candidate who wasn't even nominated. So it just gets crazy. Like the system is wild. And so, but they listen to mainstream media. They get their news from it. They get their research from it, and that's what they're looking at. And so they're kind of ignoring it as a viable separate asset class. They don't understand it, and so understanding is very low here across the board. Now, that said, it's low because people are still treating it like an investment, like a speculative asset. Okay. I understand that. And it's going to continue to be like that until it gets big enough to kind of obliterate that narrative. However, how does it evolve? Well, now that we got these spot ETFs, what's important about that is that institutions can buy it now much more easily than they ever have before. Like, it was almost impossible for institutions to buy Bitcoin before. And we get this question all the time: well, why wouldn't they just buy regular Bitcoin? Well, they can't. They don't have the ability to. There's no function for them to do that because they're in an institution, which means they have this portfolio. You're a portfolio manager. You answer to an investment manager, your chief investment officer, answers to a board. If you're at a pension fund, or if you're in an endowment, like, you can't just go and buy this thing that's so-called speculative asset, because it's not like a regular investment. Who's going to custody it? Who's going to take on that risk? How are you going to do it? Where are you going to buy it? Are you going to buy it on an exchange? Are you going to buy it on this place, Coinbase or Kraken? What's a Kraken? Like literally, people are like, you've got to be out of your mind that you think that we're going to send dollars from our endowment to a place called Coinbase or Kraken, and then suddenly, so this has been an issue all along. And then who's going to actually custody? How do we know they actually have it? Like, who's overseeing this? Where's the SEC? Are there laws and rules and tax rules around? Like, how do we do this? And there's so much uncertainty that, they don't even know where to mark to market. Like, are we going to market at New York Stock Exchange time or London time? It doesn't ever close. Like, where do we market? So there were so many issues to it that in one fell swoop, now you got BlackRock and Fidelity and Bitwise and all of these new ETFs that physically hold the Bitcoin in them, that they can just go and buy it like any other ETF, like any other stock, with the same brokers for the same price, settle it in the same way, custody it with their same prime broker, mark to market in the New York Stock Exchange time. No problem. Everything's solved. The only thing that's not solved is whether or not you can get margin on it, which you likely cannot at this point. So, that in and of itself this year has been such a monumental shift, and we're not seeing it in price yet. We just came through a halving. There's a lot of geopolitical uncertainty. We've got uncertainty with the economy. There's macro factors that are involved in it, whatever. But the point is that I know of institutional investors that are now starting to do what we call dip their toe in. They leg into a trade. What do? They leg into it by buying a little bit easily. So easy to buy a little bit, a few million, like 10 million bucks for a $15 billion hedge fund is nothing. So they just leg into it, and then it forces them. It's on their sheets every single day. And every single day they come in, they see this in their portfolio, like, okay, I got to do the work on this and decide, am I just going to blow it out, or am I going to actually start adding to this position in earnest and make it a core position? Like, which way am I going to go? It's forced them to do the homework on it. And so as you have more and more institutional investors do that, they'll understand it better. As they understand it better, more money will come into the space. It'll just kind of snowball. And it will happen slowly over the course of the next 12 to 18 months, I believe, but it's happening. And ignoring all the geopolitical and political and economic factors, that is happening. And it's just a question of, I don't know where price goes, but the most important part is that you get more people involved in the protocol that understand it better. And that's what grows it. And that's what makes it a true store of value, at least in this world that we live in the US, where that's what it's being treated as an investment.
Yeah. Very interesting. I agree. I think we're in exciting times. I think the ETF approval, although it's not physical Bitcoin, it is a huge step for institutions and potential larger scale investors to get exposure to Bitcoin without having to, as you mentioned, go through exchanges or traditional methods that individuals would.
And people in their IRAs.
Yeah.
If you have an IRA, you can buy it through Fidelity and many other platforms. It's really easy, just like any other ETF. But not in 401ks yet, as far as I know. But in your 401k, you may be able to get some exposure through it through things like on the platforms of Goldman or in BlackRock, that they, if you have exposure to the ability to buy those funds, because they are allocating to their own funds in it now too. So yeah.
Yeah, and yeah, I mean it's just the beginning of the institutional adoption. I agree with you. I think we'll see a lot more developments in that space in the coming 12, 18 months, and especially long term as well. Um, and yeah, I mean there's a lot of different threads we could continue to pull on here. We'll probably have to have hopefully a part two to do a deeper dive into the rest. But my final question for you today is because we are in a period where I also think a lot of new Bitcoiners will come into the space, whether that's individuals or institutions. What advice would you have to people who are freshly entering the space?
Yeah. So if you're freshly entering the space, you don't understand why Bitcoin. I often point them to books like Bitcoin Standards is obvious. You know, people are using that. And then one I like to really recommend lately, it's pretty accessible, is Broken Money by Lynn Alden, and it tells them like really the underlying thing. When I talk to people and they ask me what are you doing in Bitcoin, like what are you like? You a huge risk taker? I'm like, no, I'm like, I come from a world of arbitrage. I'm like a low risk guy, you know?
Yeah,
And like, which is so ironic that I'm in this new protocol, and I am all in on this thing. And people look at me like I'm crazy because you can't understand. Like you came from you came from a risk management, low risk environment. And now you're in this thing that seems so risky. I'm like, understand the money, understand the manipulation of money, understand what the problems are with fiat currency and debasement of it, and then you'll understand why Bitcoin. So that's the first thing, and once people can understand that, it's a small bridge to understanding why Bitcoin, and most of them will make that. They'll understand once they understand what Bitcoin really is. They'll make that small walk across that bridge themselves. They'll be like, "Oh, no wonder. Okay, now it makes sense to me. Now it makes sense."
yeah, agreed. I think education is the key for most people, and because it can be tempting when you first enter the space. You know, there's a lot of shiny trinkets and get rich quick schemes. It seems like, and all these different coins. So, education, especially around Bitcoin and the value proposition, is great advice. But James, thanks so much for coming on the show today. I learned a lot. I think there's still a lot left to dive in. I also recommend because I know you also have a really great newsletter that you put out, which does actually explain a lot of these fundamental, also traditional financial concepts that we talked about earlier, also, and explains it in really accessible terms. So I suggest everybody go check that out as well. And I don't know if there's anything else that you would like to mention, or just where people could find you and learn more about what it is that you're doing.
Yeah, no, I appreciate that. The newsletter is called The Informationist. You can just find it at jameslavish.com. And I take one complicated financial topic and simplify it for everybody on Sundays. And then I'm the co-managing partner of the Bitcoin Opportunity Fund with David Foley, and met him through Larry Lepard. And so we are investing in the Bitcoin space. It's in First of all, the fund is closed. Our first fund is closed. We're not taking any more investors. But we are focused on investing in the Bitcoin space and public and private opportunities. And so if you're an accredited investor and you're interested in that kind of thing, and you want to augment your core Bitcoin holding with something like that and investing in the space, then you can find us at bitcoinopportunity.fund. Just let us know, and we'll send you out materials when we gear up for our second fund. So, but yeah, that's it. And I appreciate you having me on. It's been good. It's a completely different angle in some ways, so I appreciate it.
Awesome, James. Thanks so much for your time.